On the EA exam, tax-exempt doesn't automatically mean 501(c)(3). Section 501(c) is a whole universe: charities, social clubs, labor unions, and more. The big 501(c)(3) advantage is donor deductibility. If a donor asks, "Can I deduct this gift?" you're really asking, "Is this a qualified 501(c)(3)?" Also remember, exempt entities can still owe tax on unrelated business income. To qualify as a 501(c)(3), start with the organizational test. The entity must be properly formed, and its organizing document must limit purposes to exempt purposes. Here's the trap. A nonprofit cannot be a partnership or a sole proprietorship. For 501(c)(3), you're looking for a corporation, a trust, or an unincorporated association. If the legal structure is wrong, the IRS can say no before activities even matter. Next is exempt purpose. The organization must be organized and operated exclusively for one or more listed purposes. Memorize the usual suspects: charitable, educational, religious, scientific, and literary. Then the oddballs they love to test: fostering national or international sports competition, preventing cruelty to children or animals, and testing for public safety. If the mission statement drifts outside these, you're in trouble. Now the operational test: what the organization actually does. A substantial portion of activities must further the exempt purpose, and there are 3 big operational landmines. 1. Political campaign intervention is prohibited. 2. Lobbying must be only an insubstantial part of activities. 3. No private inurement or private benefit. Earnings can't flow to insiders, and the organization can't be run to benefit the founder's family or other private interests. Political activity is where exam questions get sneaky. A church can talk about issues and encourage voting, but it cannot endorse a candidate. If a minister says during services, "Vote for candidate Weston," that's political campaign intervention by the organization. That can jeopardize exemption. The key is the organization's resources, platform, or official communications being used to support or oppose a candidate. Private benefit and inurement are the other classic revocation stories. Picture a charitable trust that claims it awards scholarships to low-income students, but the winners are all the founder's relatives. That's private benefit, and it can lead to retroactive loss of exemption. Retroactive is the scary part. The organization may owe income tax, and donors can lose deductions. On the EA exam, follow the money and ask, who really benefits? Finally, don't forget the practical admin signals. Exempt organizations generally need an EIN even with no employees. Banking and IRS filings depend on it. And not all exempt entities file the same return. Small ones may file the 990N e-postcard, larger ones file Form 990, and private foundations file 990 picofarads. Also, churches are a weird exception. They may not need to apply or file 990, but they still handle payroll taxes like any employer. Which of the following organizations could not receive approval for tax-exempt status under IRC 501(c)(3)? Consider these options: a local chapter of the Salvation Army, a partnership for educational research, a college alumni association, or a local boys and girls club. Focus on what the IRS requires before it even looks at activities. Think about it. The correct answer is the Partnership for Educational Research. A 501(c)(3) can't be organized as a partnership or sole proprietorship. It must be a corporation, a trust, or an unincorporated association with purposes limited to exempt purposes. A tempting wrong choice is the Alumni Association, but that can qualify if it's properly organized and operated for exempt purposes. Every exempt organization must have a what? Your choices are a charitable purpose, an employer identification number, an annual information return, or an affirmation letter from the IRS. Think about what's needed, even if the organization has no employees and might not file a 990. Think about it. The correct answer is an employer identification number. An EIN. Exempt organizations generally need an EIN to identify the entity for federal tax administration, filings, banking, and IRS correspondence. The tempting wrong answer is an annual information return, but some organizations, like churches, may not have to file Form 990, even though they still need an EIN.